Downside, there are, of course, stocks, in news, the likes of Canfin, Triveni Engineering. We'll actually speak with the management in just a bit, and something like an AGI Greenpack also, which are seeing cuts. So that's what's happening in terms of the market action. But let's kickstart the show by bringing you a conversation now. Triveni Engineering, like I was mentioning, is down around 5% in trade. This after the company reported Q1 numbers. Now, we have seen a revenue decline this time around, so it's around 2.3% in terms of a revenue dip. The positive, however, in the results is that the gross profit margin has seen a 500 basis points expansion. So that has come in at 29%. And if I compare it, this is at 24%. By the way, before we just move ahead with that conversation, if I can take a look at Shree Cement's numbers flashing on your screen right now. We have the standalone net profit, which has come in at 580 crores. The revenues at 5,000 crores. This is, a lot higher than the estimates that we had of just around 4,050 crores. The stock has seen a big spike higher as well right now, right after the numbers. These are just the initial numbers that we have. In fact, Nigel is also with us here in the studios. Nigel, first numbers definitely look very positive here.
Well, indeed, the numbers look, quite positive in terms of, what has initially come out. And that appears actually like a rather large beat on the top line. So we'll need to find out exactly how did that happen. But, in comparison to our estimates, it's quite a big beat because it's coming at around 4,990 crores. And on the EBITDA front as well, this actually will come as a pleasant surprise, because we have seen the larger names like Ultratech Cement as well as Dalmia who have reported numbers, and in fact that's been a bit of a miss. Focus just on the power and fuel cost. Well, that's moved up a little bit actually, but I think in comparison to what the growth is on the top line, it hasn't gone up by that much, and that's why I think the street would like these numbers. So that's one of the numbers that you should be tracking, the power and fuel cost. Well, just to give you a number, on a quarter-to-quarter basis, you have the revenue growth that is up by close to around 4%. But you have the power and fuel cost, which is down by close to 3%. So that's telling you a swing of close to around 7%. So that's one factor that's contributed in a big way. And also, let's just check out the freight and forwarding cost out there. That, in fact, is mildly higher by close to around 3%. So no relief on that front. But the power and fuel cost, well, that's clearly the one that's driven this number. And that's why I think, the street likes that, particularly in the backdrop of the other companies disappointing. Shree Cement's numbers are looking good. We'll try to come back with a volume number. They normally don't disclose it in the results, so we'll have to try to reach out to the management and come back to you. But prima facie, a beat on the top line, and that's further percolated down onto the EBITDA performance. For the time being, it appears operating leverage has played out, and the second factor would be lower power and fuel cost. Some part of that is reflected, which was absent in some of the other larger cement companies that have reported. So a thumbs up from Shree Cement as we speak.
Okay. Okay. All right, Nigel. That sounds good. Thank you very much for the quick first take on it. Stock cooling off a little bit from the high that it hit earlier. Well, the next company on our focus in terms of earnings is Triveni Engineering. Now, the company's top line came down a bit. It was down about 5%, but there's a massive expansion at the margin level that's played out. Almost 500 basis points. That's at the gross level. So let's get some more details in. We have Mr. Sawhney, Vice Chairman and Managing Director at Triveni Engineering, now joining in for the conversation. Thank you for being with us, Mr. Sawhney. So if I look at top-line growth, first we'll come to margins in a bit. The sugar segment has obviously declined this time around, but the distillery business has done very well. Can you give us some more trends on the top line itself? On sugar, what are you expecting? Otherwise, there's this whole talk of a global shortage as well, and we're hearing that even local prices could be perhaps heading higher. So just an outlook on both the businesses first, sugar and distillery.
Sure. For quarter one, our sugar revenues were down primarily because of the quotas that we received from the government of India. So because of lower quotas, we had lower sales, and that impacted revenues. However, you don't have those constraints as far as our distillery business is concerned, or as far as our engineering business is concerned. Both of those businesses actually showcased pretty robust revenue increase and margin increase, which is quite welcome. I think looking forward, from the sugar perspective, I think we can see a return to higher dispatches, certainly as we move into the festival season. So I think quarter one was a bit of an anomaly. I don't think that is the barometer for the future. And as far as ethanol is concerned, we're in the middle of the ethanol supply year. The target for this year, as you know, is 12% for the nation. And next year, starting 1st of November, is 15%. So we can see larger increases. And with the 4 distilleries functioning at high levels of capacity utilization, I think we're well placed as a company to participate in that increase demand by the oil marketing companies.
Can you just give some numbers to that demand, because you're expecting the sugar business to also pick up? So in terms of volume growth, both on sugar and ethanol, what's the range that we can perhaps work with, say in Q2, Q3, or if you can give even a full year outlook, that would be great.
Sure. I mean, the year is a little different to the fiscal year, but we're looking at a 12 to 15% increase in production when we compare supplier to supplier. So we're moving from about 18 crore liters of supply to 21 plus crore liters of supply in this particular in this year. And then moving forward, as the 2 other distilleries come online, part of which will be captured in the next fiscal year, we will then be ramping up to about 30 crore liters supply plus. So that's the effective target. I mean, I don't have the numbers for you on a quarter-on-quarter basis. It's pretty much on a year-on-year basis, but a fairly substantial increase. And again, it sort of cements our participation in this vital program for the country.
Tarun, you said Q1 dispatches were a bit of an anomaly. What were the numbers on the sugar dispatches? And you said it will improve. What can we expect by way of Q2 dispatches, Q3 dispatches as we enter the festive season? You spoke about production, but can you tell us on dispatches?
Sure. So the dispatches were down 21% compared to the previous quarter of the last fiscal year. And that was the anomaly. I think the distribution of the quotas across the country was different in the quarter under review. I believe that now with lower balances and Triveni having a reasonable amount of sugar in its inventory, I anticipate that Q2 and moving forward Q3, Q4 will return to higher levels of sales and higher levels of dispatches from our factories. The exact quantum is very difficult to predict because this is determined on a month-on-month basis.
Okay, got that. It's good to have you on the show, Mr. Sawhney. If we can talk about the distillery segment as well. Like you were pointing out, the growth has been good over there, but the margins have definitely contracted, right? It's coming at around 9.5%. And what we have seen from you is above 13% as well, if I look at a year ago. What do you think is a sustainable kind of margin that we can expect here?
That's a great question. So the product mix, or rather the feedstock that has entered our distilleries in the last quarter compared to the previous corresponding quarter is very different. In the previous year, it was all molasses based. So B-heavy molasses, which is one of the feedstocks, actually has the highest margin. This quarter, we had 50% of our production coming from grain. Grain is at a slightly lower margin level. But as we look at supplies going forward, we're going to be having a blended average of grain as well as molasses as we approach the numbers that I just spoke about. So we're going to see margins in and around about the kind of level that we've reported in this quarter going forward on a sustained basis.
Just a word on the engineering business. What's the top line that you should anticipate this time? Are the 30% margins sustainable? And any plans to demerge the engineering business?
So, our combined engineering business turnover increased by approximately 25%, a very healthy growth. Our power transmission business had revenue growth in excess of 70%, PBIT growth in excess of 80%. So all looking very, very positive. And order booking as well has hit record highs for both the power transmission and our water business. So I'm anticipating a very solid year going forward. No plans as yet of any demerger.
Okay, no plans of a demerger. That's loud and clear. Tarun, finally, so to get back to the core business, get back to sugar, give us an outlook in terms of the volumes that you're hoping to do this year as this quota issue sort of resolves itself in the coming quarters. And also a breakdown between how much of it will be sold domestically and how much are you doing in exports. And a sense of realizations, because we believe, again, to go back to my original point, given the tightness in the market, I believe realizations are quite good in the overseas market.
Right. So again, Triveni produced, when we look at the sugar season, we produced 7.5% higher sugar compared to the previous year. We produced almost 1 million tons of sugar in the sugar year that's actually gone by. a reasonable chunk of it was actually exported through the government scheme. Now, it's a controlled industry, so the government announces export quotas and then allocates it. Triveni is one of the largest manufacturers in the country, gets a fairly sizable share of that quota. Now, looking forward, I imagine that from a revenue perspective, of course, we will be receiving domestic sale quotas, and therefore there will be a catch-up that will happen in that business. It's certainly anticipated, given that we have a higher amount of sugar inventories through this entire cycle. But as far as exports are concerned, I think that is a question that we will see a little bit later. GOI needs to make that decision. Next year is an election year. We have a fairly varied monsoon that has happened across the country, excess rainfall in the north, huge areas of low rainfall in Maharashtra and Karnataka, etc. So it's been an uneven balance this year. So I think there is some cautious optimism. I do think India can export sugar next year. The timing of it, of course, will be a little bit later. So I think we're looking at Q1 of the next calendar year for that decision to be taken. The total quantum, of course, will be lower. If that decision does get taken, it will be lower than the previous year.
Okay, got that. Tarun, good talking to you today. Thank you very much for joining in and giving us an idea about all sides of your business. That is Triveni Engineering. Moving on now.